Dollar cost averaging is typically a method or technique that a lot of financial gurus, not the stock market gurus, but the financial gurus that talk about wealth building, try to push you into, especially if you're a beginner investor and you don't understand how the markets work. So what these financial gurus try to do is they try and let you know that if you dollar cost average as the stock is heading lower, eventually the stock market will rise and you will gain more of your money back because you've averaged your shares to a lower cost basis. Hey, I'm Sasha Evdokov, and I'm here to tell you that this concept is incorrect when talking about the stock market or with dealing or trading on the stock market. This can be a very dangerous way to dollar cost average. So here's what can happen if you go ahead and use the method that a lot of financial gurus talk about when dollar cost averaging. Oftentimes, you may purchase 100 shares of a certain stock. As the stock continues to head lower, what they'll advise you to do is go ahead, purchase another 100 shares. So let's say the stock was at $100 a share, it goes down to $75. Go ahead and purchase another 100 shares. As the stock continues to $50 a share, buy another 100 shares because eventually it's going to continue rising higher. But time moves on and time continues and the stock continues lower and lower. And over time, you've accumulated, let's say 1,000 shares of a company that's worth less than $10 a share. Now you may think that, this is typically improbable or may not likely happen. But I can think of a few instances, and take a look at some of these charts right below this screen, where it has happened more than one occasion. They used to say that GM would never go bankrupt or it would not have trouble. It was a strong company. But look what happened in the past. There are a lot of companies that have went lower and lower in their stock price, even though they're fantastic or great companies, but have never recovered or have seen higher stock prices. And this is because the market trades some of the best, or they want to see future projected growth. And if a company doesn't show that, even though it may be a great company and it shows stability, you may never see a higher stock price. So don't dollar cost average down if the stock continues heading lower. The better route, if you're dollar cost averaging, is to go ahead and set an initial stop, an area where you're going to get out of the stock no matter how bad it seems. So for example, let's say you bought however many shares at $100 per share. As the stock goes up to $110 a share, you can go ahead and add a few more shares and dollar cost averaging up. Okay, so as it continues rising higher, dollar cost average up. So maybe it gets to 150, then you can go ahead and add a few more shares. Now, as time moves forward, continue to raise your stop or an area that you would get out higher and higher. So it used to be $100 a share. Then it may be 105, then it may be 107, 115. So you continue raising that. So if the stock gets lower or below that, you're out. No ins, ands, ifs about it. You're just out of the stock. So that's a little bit better route to dollar cost average. And if the stock is playing or dipping lower below that, right around that stop region where you would get out, then this is where you can go ahead and add to your position. But if you're looking to dollar cost average as the stock is heading lower, you can be left with a lot of stock that's just bad stock that will never see daylight again. So always be mindful of what you're doing in the markets because sometimes some of these things never recover. So I hope this video was helpful for those of you looking to use the dollar cost averaging method. So my personal recommendation would be to dollar cost average up, or to always set your stop and constantly raise it. And that way you're buying on the dips, on the lighter dips, rather than buying on the big dips. So always have a hard stop in place. If the stock gets to that point, you are out. Okay, so thanks for watching. Thanks for looking at this video. And if you enjoyed this video and you want to see some of the stocks I'm watching in the current market condition, then go ahead, click this link and enter your name and email address in that field. And when you do, you'll get my rapid recaps that I send out only to my newsletter subscribers. And if you want to condense your stock trading education and you just want to go deeper into learning about the markets, then check out some of my intense training video course series at TRADERSFLY.com. Thanks for joining me, and remember, there's more to life than just money. Go do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.